tough to be bearish on Apple after a quarter like that. But you raised your price target, but it's still lower than where the stock is trading today. So explain why you think that all of this good news is more than baked in.
Yeah, I mean, and just to be clear, we've got a neutral rating. I keep telling you guys that we don't have a sell on it, so we're kind of in a holding pattern on a lot of this consumer electronics.
But, with a stock like this, a neutral or a hold is almost like a sell. Like nobody dislikes Apple or Amazon. It seems like. So yes.
Well, you know what's funny about that? If you look at Apple last year, the stock basically performed in line with the S&P 500 most all of the year. So you would have been, if you'd bought the S&P 500, you'd have had the same returns. So now at the tail end of the year, it did perform better. So you had a little bit of outperformance at the end of the year, but only about 6% gain versus the S&P. So yeah, neutral was the right call last year. Now we'll see what happens this year. Clearly, though, nice to end a tough week in equity markets with such a strong report and a positive indication for consumer demand, which I suspect we're going to see through other retail reports as well. I mean, clearly the consumer end of the year very strong, particularly Apple consumers.
Now, given, Rod, that Apple seems to be weathering supply chain issues better than a lot of names, their customer loyalty and their ability to differentiate on product has allowed their margins to hold up. And the M1 seems to be doing well, arguably paving the way for more vertically integrated devices down the line, perhaps an AR/VR headset, a car, what have you. Is that just not good news? Is that not something that you believe in? Or is it so far off that it's too soon to give them credit for that stuff?
Yeah, I mean, those are all speculative products. Of course, Apple doesn't provide much of a roadmap to anybody. We do think they'll do a VR product. We think that'll probably be in early 23, not 22. And we're not completely sure how big that product will be from an earnings point of view. A car is much easier to do the math on. Just very difficult to get enough earnings contribution from that to matter. So you still have a company here that's very tied to the iPhone. We do model Mac share increases. So we actually are above street on our Mac model because we think those M1 products are extremely good and will continue to take share in the PC market. So, there are elements of Apple we're very positive on. It just, I put it in perspective for you. The company's CAGR of revenue was 7% for the 5 years up to 2019. Last year in 2021, revenue grew 33%. So, and the last time that happened, by the way, was when they launched the iPhone 6 in late 2014. So their fiscal 2015 year, they grew 29%. But they also launched into China that year. So that was the famous super cycle year. The year after that, revenues declined over 7%. And we don't have revenues declining this year. We've got them growing a little bit. So, that's the kind of historical perspective I think you need to have here as well. Not to say Apple's not a good company. It's just, these are phenomenal numbers. And that goes for all of consumer electronics, not just Apple. Everybody's had just an unbelievably positive result period here during COVID and these lockdowns.